Friends, in my first analysis of CSB Bank IPO, I had mentioned to provide my detailed investment guidance and probable price target once the price band is announced and figures for first half year is declared. So now I have got complete figures for the first half of 2019-20. Today I will discuss forthcoming IPO of CSB Bank Limited in depth with my estimate of listing and subsequent price. The promoters of CSB Bank Limited are FIH Mauritius Investments Limited, a company belonging to Prem Watsa, popularly known as Canadian Warren Buffett. Shri Deepak Parekh of HDFC is also a director in its Indian parent company. During last 2 years, the bank has taken various steps to strengthen its organization and to clean its balance sheet. I will discuss each of these steps so that you get better idea of bank's future. In the year 2017-18, the employee cost of the bank was at staggering 20.17%, which was very high compared to any other bank in India. During last 2 years, the bank reduced its staff strength to 1,100 from the earlier staff strength of 3,000 plus through voluntary VRS, compulsory VRS and other steps. Due to this action, the staff expenses during 2018-19 had shot up by 34%, and now in the first half of the current year, the staff expenses has declined by rupees 48 crores. As compared to earlier staff cost of rupees 11 lakhs per person, the newly recruited staff comes at around rupees 3 lakhs per annum. And hence in the coming years, the staff expenses to total revenue ratio is expected to be very low, and it will boost its bottom line. The bank has made significant changes in the top management with recruitments of well-experienced persons from HDFC and other reputed organizations. There is another major change in the organization structure. Now each of the branch and its various functions are vertically monitored. A person looking at home loan business at the branch level will be directly monitored by a top team of home loan department at the HO level. The bank has resorted to accelerated provision of NPAs, and at present its provision coverage ratio is nearly 80%. According to the management during IPO discussion, the recoveries are very impressive, and that is the reason for sharp fall in provisions in the first half of the current year. Last year the bank made provision of rupees 111 crores, which is which in the first half has declined to just rupees 34.64 crores, and I believe that in the second half the bank may not require any provision for NPAs. At present, net NPA at the end of September 2019 is below 2%. Considering first half performance of the bank, I expect to show earning of rupees 7.20 for the current year. Another important aspect is well capitalization. The CSB Bank at present is well capitalized. Its current capital base is sufficient to propel credit growth till 2022. It will not need any fresh capital infusion during this period. This will sharply improve return on equity during next 2 years. Now let's compare CSB Bank with other small private sector banks such as Dhanlaxmi Bank, Federal Bank, DCB Bank and City Union Bank. I will compare each of these banks from its net NPA angle and from its current price to book value ratio angle. At this juncture, I do not consider prudent to compare from P multiple angle. Federal Bank having total income of rupees 12,070 crores and net NPA of 1.48% has price to book value ratio of 1.26. City Union Bank with total income of 4,281 crore and net NPA of 2% is available at PBV of 3.14. DCB Bank having total income of rupees 3,392 and net NPA at 1% is quoted at price to book value ratio of 2.15. Dhanlaxmi Bank has total income of rupees 1,026 and net NPA of 2%, and its price to book value ratio is just 0.60. Whereas CSB Bank with total income of rupees 1,483 crores during last year and net NPA now below 2% is offered at upper price band to book value ratio of 2.18. So from this angle, the IPO seems to be fully priced and appears that there is very little scope for the appreciation. However, considering its strong promoter group, now low employee cost, well capitalization, high provision coverage ratio of 80%, change in organization structure, competent management, and very small offer size, the IPO may list at much higher price. And so I am tempted to assign higher P multiple for this IPO. And accordingly, I expect the scrip to get listed in the range of rupees 260 to rupees 270. That is at the P multiple of around 36 on the current year expected EPS. IPO opens on 22nd November of this year and closes on 26th November. Anchor portion will open for subscription on 21st November. 70% of offer is for QIB. Only 15% is for high net worth investor and just 10% is offered to retail investors. At this juncture, let's analyze grey market past trend. First of all, let me clarify that I don't deal in grey market, nor I recommend buying or selling in grey market. The grey market trading started with small premium of just rupees 22 on 9th November. On 14th November, grey market premium moved up to rupees 82.84, and at present, that is on 21st November, the grey market premium is quoted at rupees 72.74. Subject to rates are rupees 4,000. Let me once again clarify that I do not recommend trading in grey market. It is not at all advisable. These rates are being mentioned only as news item related to this IPO. In this IPO, allotment may be tough, but it appears that the listing gains will be quite attractive, so you may apply.